So let's touch base with Zimbabwe, our economy, which grew some 6.3% last year, despite the fallout of the global virus pandemic, as well as the impact of a major drought that hit the southern African country. Now, that growth now looks endangered, no thanks to the faltering local currency against the US dollar and a very stubborn inflation. Let's cross over now to Harare for a live chat with my guest, Eddie Cross, an economist and a policy analyst. A good evening to you, sir, and great having you on the show tonight.
Get back.
Great to have you. Thank you so much for making the time, Eddie. The currency is the key focus of our conversation tonight. Is reportedly faltering again after an initial steady position against the US dollar. What's going on down there in Harare, Eddie? Tell me.
Well, we have a unique situation here in the sense that we don't follow a standard international basis for foreign exchange trading. We still have exchange control, and we have a system here which converts incoming foreign exchange only a proportion, about 30%, at a market rate. And that means the informal rate here basically dictates the market rate for foreign exchange. So we have an official rate today of 142, 145, and the unofficial rate, the parallel, what we call the PMR, parallel market rate, is sitting on 280, 285. This is a very serious problem. And the only way it can be remedied will be by complete liberalization.
Is it difficult for the authorities in Harare to fully liberalize the foreign exchange market after those initial success you folks had with the interbank market just last year and in 2020 despite the pandemic?
Yes, that had a dramatic impact on the situation. It stabilized our rate for a while. But the problem is we haven't moved enough foreign exchange onto the auction to meet domestic demand. Domestic demand on a weekly basis is around about $120 million. And we're putting about $40 million through the auction. And until we actually bring all our foreign exchange inflows onto a market and have it traded properly and on an interbank basis, we won't get a real exchange rate. And this PMR situation will persist. People have lost confidence in the local currency, and they don't have a great deal of confidence in our monetary authorities. So if they do receive local currency, they transfer it immediately into US dollars. So we're accumulating foreign exchange balances at the rate of about $100 million a month. We have, in fact, a considerable surplus of foreign exchange over our requirements. And there's no reason for this artificial PMR rate, no reason at all. Our fundamentals are sound. But the problem is to get our politicians and our authorities to let go and let the market determine the rate. They're terrified of the market, but in fact, it's only the market that can sort out the situation, nothing else. As long as we fiddle, Rome will burn.
What's the exchange rate as today? Official and on the streets of Harare?
Official is 142 on the auction rate, and on the streets it's 285, around about 100% above that.
So there's a big room for arbitrage there. And the central bank keeps looking for, the government keeps looking for scapegoats and says some banks, some institutions were responsible, some multinationals were responsible. Is that true? How far is that?
Yes. Today, the Monetary Policy Committee issued a statement where they've raised interest rates and they've cut money supply. And that's in an effort to try and curb the inflation rate. I personally don't think that's enough. I think they have to tackle the PMR rate. They have to tackle the parallel market rate. And the way to do that is to simply liberalize, remove exchange control, and allow the market to determine the price of foreign exchange. It's quite simple. That's what they do in all our neighboring states. I mean, if Somalia can do it, heaven.
If I respectfully cut in, Eddie, if the market is allowed to decide exchange rate, where do you think that will be? It's currently about 280, 300 on the street. Do you think the average price will be if the government, the authorities let go?
Well, I think it would strengthen considerably. I think the PMR rate would collapse immediately. And the reason for that is quite simple. We have a significant foreign exchange surplus. But people are putting that surplus into the banks and neutralizing it. It's not being circulated in the marketplace. And I think this is a very dangerous situation.
But how tough is this currency situation for Zimbabwean businesses? Those of you in the business and commerce and the people in general, how do you get investments? How do you pay salaries and wages? Is it in local currency or in US, is it in local dollar or the United States dollar? How are you folks getting by?
About 70% of our economy is informalized. And in the informal sector, the currency of choice is US dollars. And by and large, if you go into the informal sector, you will not see many Zimbabwean dollars being traded. But in the formal sector, the Zimbabwe dollar is the dominant means of exchange. And people still get paid in local currency. The problem is the moment they are paid, they go into the market and they change the foreign exchange. They change their local currency for foreign exchange. And this drives up the rate. We have a substantial diaspora, and our remittances have risen strongly this year, despite COVID. It's been quite extraordinary. But our economy is growing. Our base economy is growing rapidly. You saw the figures for revenue in South Africa. That basically reflects foreign exchange growth through exports. And we're in the same situation. We are a substantial producer of gold, platinum, nickel, chrome, and all of those resources, all of those currencies, those metals are at very high levels at the moment. And we're seeing very strong inflows of foreign exchange at the moment. So our economy is actually growing. Last year, my own view is that the official rate for the growth in the economy was substantially more than 6%. It was probably closer to 10% or even 11%.
Now, the IMF has reportedly said that the root cause of poverty in Zimbabwe is the country's weak local currency. Do you agree with that position of the IMF?
I think to some extent they're right. To the extent that I think the PMR rate, the parallel market rate, which is devaluing very rapidly, is in fact the main driver of inflation. Our inflation today is 60% per annum, or 60 or 70% per annum. And I personally believe there's no way we can hold it at that. It's going to be above 100% before the end of the year. But I don't believe that is the core reason for poverty. I think it's other reasons, structural reasons within our economy. And we've got to get our rural economy, our farm economy, recovering more rapidly than we have in the past. And that is a very complex problem because we have in fact wrecked our agricultural industry in the last 20 years. And putting it back together again is a bit like trying to stick Humpty Dumpty back together once he's fallen off the wall. It's not going to be easy. It's going to take time.
So what's the authorities in Harare, what are they doing on the issue of inflation?
Well, I said today, the Monetary Policy Committee of the Reserve Bank issued a very strong statement. They've raised interest rates to 80%. They've tightened money supply. They've, to a small extent, liberalized the foreign exchange market. They've allowed the banks to trade $1,000 at a market rate. I think that's, quite frankly, I don't think that's enough. I think they should liberalize. My view is if we adopted the local currency as the sole means of exchange, at the moment you can still use the rand, you can use pula, you can use US dollars, and in fact I would think that the US dollar is the dominant currency being used in the retail trade today, by far and away, and we've got to get away from that. So our currency should be the sole currency of exchange. We lift exchange control. So anybody can walk in a bank and convert their local currency into foreign exchange and do what they like with it. We've got to scrap exchange control. And those are radical measures.
My final question, just a simple yes or no. Should Zimbabwe jettison the dollar, the Zimbabwean dollar, or should it be saved?
We learned when we dollarized in 2009, we learned very quickly that for our productive sector, dollarization is a very bad thing. It made us uncompetitive. And we became a supermarket for the region. Since we brought in a multi-currency system, brought our own currency back in, our domestic economy has grown substantially. About 60% of what we see on our supermarket shelf now is manufactured in Zimbabwe. 3 years ago, it was 95% was imported. That's big progress.
Thank you so much for your time tonight. As always, Eddie Cross in Harare. Stay safe and have a restful night there.